Hey everybody, welcome to Trading Capital's daily analysis video. It is May 25th here, and so far the markets are catching a positive bid. The spiders are currently up just over percent as we talk. The Nasdaq up 1.56% and the IWM just under 2% on the day. And you can see here the spiders have broken out of this downsloping trend line that we're watching. If we just flip to the hourly chart, this is connecting your pivot to your pivot, and you did break out, and it's looking to be now you are confirming on the hourly chart above. So it'll be interesting to see where we close once this final 20 minutes is up on the day. But overall a pretty positive day. You notice that we did open lower, gap down lower, and then the market started to rally in pre-market. Market surged in the open, made a short high, and then popped up, continuing into this resistance points. And then, you know, the markets kind of just sold off ahead of the Fed meeting, or sorry, the Fed minutes. And once we got the Fed minutes, there was a push up, a push down, kind of this volatile price action until markets digested the Fed minutes. There wasn't really any surprises to be seen from Jerome Powell and the Fed. And I think since they're sticking to the original plan, there's a lot of rumors in the market that Jay Powell was going to be the next Volcker, and the markets are likely to head a lot lower. He's going to raise rates to the neutral rate, which I don't see happening at all. Raising rates to a neutral rate is not going to happen. That being said, I do think now we are primed for a potential rally into the holidays, and we'll just have to see how this market closes. On the daily chart, you can see that it is an up day, nice green candle. It'll be interesting to see where we close on this candle. But the momentum should continue to the upside now that we do have some Fed clarity, and the Fed is not acting like a Volcker at this point in time yet. I do think we go up to fill this gap still around the 409. My analysis has not really changed. The interesting price action of the day so far is natural gas. Taking you to the intraday basis, you can see this massive collapse right after you put in this beautiful intraday topping tail, right at a 14-year high in natural gas. So that just shows you that the price action has hit a major level of resistance and it's pulled back. And to think the natural gas was up around 7 or 8% on the day, and now it's only up about just over 1%. But nasty technical damage done at the high. We just have to wait and see. What I am watching for is a potential daily topping tail on natural gas. Currently, we are getting that topping tail. There is still an hour and 17 minutes left for this candle, so we generally get that extra hour after the market's closed. Even though the NYMEX is closed, there's still some trading for natural gas that is occurring, so we'll have to monitor this candle over the next hour and 17 minutes. Currently, it is bearish that you made a new all-time high but have reversed pretty much all of those gains, and if you close with inside of this candle, then that basically shows that this high is still intact. And often what happens at cycle high prices is institutions will drive it up. You'll have people waiting for that breakout, but they do not wait for confirmation, and they get sucked into the rally right away, and then they get sold right into. And we were monitoring the distribution signals in our previous video from yesterday and a few other videos. We have been noticing an uptick in red candle volume. Ever since we started selling off here, there have been definitely long positions that have been selling and exiting, or at least trimming their natural gas profits over the last several weeks. And we have noticed it by this influx of red volumes. And typically, most of the red candles within this range have been bigger than the green candles. So other than over here, but the big signal that we got yesterday was this intraday red candle. And you look at the difference in size compared to this candle and this range over here compared to this red candle here. This red candle is merely half the size of this wide range green bar. However, it has nearly double the volume that has taken place within that tighter range, which means as buyers were trying to buy this breakout, sellers were dumping in. So just be on the lookout. Natural gas is seeing selling pressure at these levels. You often see an uptick in volume at the cycle highs, and that's certainly what we're seeing. Increase in volume, and then we just broke out and beat this daily volume candle with yesterday's daily volume candle. So clear signs of distribution, And once again today, also clear signs of distribution backed up by a potential reversal. Now you might be getting somewhat of a little bit of a short squeeze by the dippers, but I do think there's some significant technical damage in the short term done on natural gas, and it does favor a move to potentially test and take out this wide range green bar at the minimum, and then we'll just have to reassess from that point on. But let's just see if we get that daily topping tail moving later into the close. A couple of our earnings today. We do have earnings on Canopy Growth. Let's just flip to Canopy Growth at the moment, CGC. So yesterday we added at 477. Today it's proving to be a great add. However, we still have earnings after the bell. So we're slightly out of the money. Our average is 511. The nice thing is that our average is below this technical gap fill. That's always nice when your average is below a key technical area. Can Canopy Growth flush down lower? It certainly could. Our next level of support will be this lower range of this channel. We will look to add to our position, probably about 1% at this level. If it continues to flush even lower than that, then 319 is our next level, and we'll just have to reassess from that point. But we'll be on watch heading into the aftermarket post hours to see how Canopy Growth performs and what their earnings are. On their last 3 earnings, they have hit. So hit, hit, and hit. If we take a look at this earnings period here, it saw a massive rally, not a real sustained length of time before it sold off. Then you come to this section over here, you saw an interim pop, and then it sold off. And then you come all the way to, let's check this one out. Same sort of thing. Your earnings reported, you saw initial pop but sell off. So it stands to suggest the probabilities dictate that you could see a pop in Canopy, and if we do see that pop, I will certainly not be shy to pull the trigger to take profits in the range of 10 to 20% on that Canopy Growth trade and look to reassess. But the trend for Canopy seems to have a pop on earnings, and then the earnings fizzles out and the sell-off commences. So we'll just have to monitor that. Analyzing the UNG chart, look at this nasty reversal in UNG. We actually had a level at 3210 to add to our UNG short position, and it just missed our level. But that's how it goes sometimes. It doesn't have to hit your technical levels perfectly. And we were actually playing this next level of resistance to add to our short more conservatively, because I could have played it exactly on the pivots and that would have pushed us out a little bit, but I decided to go inside the candles just due to the nature that natural gas has moved parabolic. And I've been hearing these things saying that natural gas is going to $25 or $50. That's insanity. I mean, when you factor in where natural gas was, it was all the way down here at 8. For natural gas to be at 50, you're going to have pandemonium in the streets in Europe. You would have people going after our politicians. You factor in how many people use propane, how many people use natural gas to cook, how many people barbecue. Those are just the small consumer aspects of where natural gas is used, let alone the commercial side. So clearly, I do think natural gas has the ability to go higher over the long term, but it is a cyclical asset, and I do believe the downside will commence at some point. I have factored in all of the war pricing and Ukraine and Russia tensions and the energy supply and the deficits that, comparing to the 5-year average. That's the average that people like to go by these days because the mainstream is pumping that out, and the IEA has also been using that as the average to indicate that we are completely undersupplied. But when you factor in, and people saying the war in Ukraine, well, natural gas has rallied over 500%, more than 500% in 2 years. This year alone, natural gas is up over 250%. That shows you that most of the war outcome is priced in already. And people keep pounding the table at that fundamental reason that it's going higher. But at some point, the high prices become the cure for high prices. And I would say a move of 510% in a commodity that is used on the daily basis by consumers and corporations, it's a pretty substantial move, and politicians will have to give in at some point to water those energy sanctions down, and we may be at that point with Europe. We're certainly seeing Eni and Italy set up accounts for European countries to potentially pay in euros, to pay Gazprom in euros, which are then converted into rubles, in exchange for Russian energy, Russian natural gas. So if that does happen, and I think when that happens, it will certainly put a lot of pressure on natural gas, and it'll kind of coincide with the building season that natural gas typically undertakes. Another stock we have to keep on the radar, let's just take a look for, is NVIDIA. NVIDIA reports earnings today after the bell. So this stock has had a nice rally into earnings. Currently it is up just over 4.42%. NVIDIA is at a good level, but we have not played it because we just don't know what they're going to come out for earnings. Typically the semis are strong going into earnings, but you never know at this point. You can see that you do have some key levels of support. You're into these pivots over here. You're also into this longer term support line, pivot high, chop, pivot low, and over here this chop. So you do have tons of support in this range. If NVIDIA goes lower into earnings, we'll be looking to accumulate on two levels here around the 148-ish, one pierce of 148, and then also there's a technical gap fill here at 139. And if it does go lower than that, there's some initial support levels over here. That would be an interesting level to accumulate at. So we have lots of support in this range. If we do get that flush, look to find those alerts coming to our inbox. Let's just flip to the intraday basis on natural gas. So again, even if you identify the intraday volume analysis over here, all these 10-minute volume candles pretty much have been the majority to the downside. The largest candle over here was this bar over here. That shows you that tons of sellers on that initial pop-up for natural gas were waiting there to offload their positions. And you would think that these wide range green bars, which are the biggest bars in the natural gas move, would hold the most amount of volume. But you would be wrong to assume that, and that's why it's key to know that the size of the bar does not correlate with a higher or lower volume. That's why you have to look at how many shares are being exchanged on any particular bar, because I've seen some tiny candle ranges where there's been an abnormal amount of volume, which is the signal that shares are being exchanged. People who have been holding natural gas for a long term are likely selling to new buyers coming in, which often dictates a likely top is near. So that's what we've been watching. If we flip to the 8-hour chart, you saw this massive distribution candle here. The interesting thing is it's one of your smaller candles, like we were talking about in some of these massive moves, but it's your largest volume distribution candle, and it's near the highs. So those are the things we have to look out for and assess on a technical basis, and ultimately we'll just have to keep monitoring natural gas and see where it closes. Let's take a look at USO. USO is coming to the top of this channel, stuck in this wedge formation. Tons of resistance in this area. It'll be interesting to see how it acts staying up into that resistance. If we look at the WTI, it is trading above its key moving averages. This is no longer a bull flag because you had this engulfing candle close, and now you're putting in this short-term bear flag that looks to break lower. So we'll just have to monitor that. If we take a look at Netflix, Netflix has been a pretty decent mover today. Excuse me while I just clean up this chart. So Netflix, let's flip to the hourly. Netflix, you had this inverse head and shoulders, and it looks like you were trying to break out, but you're failing to confirm above that on this candle. It's pushing down as the spiders sell off slightly. So that's a short term, not a good sign for Netflix, but it has had a positive move today. It is up over 3.8%. The day, it could still close a little bit higher on the day, but it's looking like it's going to close right on that trend line, which doesn't really give us any clear indication, as confirmation has not happened yet. This could be a kind of a fake out that is occurring before Netflix heads lower to fill this gap. But since the markets are so oversold, I am in the camp that we potentially could see that breakout tomorrow if the S&P and the indices get some sort of an upside bias. Everything is going to be a spider and NASDAQ trade at this point in time. Let's take a look at Amazon, because Amazon's been getting a pretty good bid for us. So Amazon is up on the day. Let's just wait for our trend lines. You can see Amazon is trading at around 21.33. Our average on Amazon is just around the 23.13 level, so right into this pivot zone. I do think there's a potentiality that you go up to fill these gaps still around 2,700. That would have to coincide with the spiders or a QQQ rally. Taking a look at Apple, we are holding Apple long as well at this point in time. So Apple, we're in the money. We're around 138.65. Apple, you can see it's run into this downsloping trend line of resistance. If we flip to the hourly, you can see that this could be somewhat of a little bit of a back test where you've broken out. You're now retracing back to the original breakout zone, and you could look to push higher. We still think you fill this gap around the 149, 150 level. That's where we will ultimately looking to take profits on our Apple trade. Let's take a look at Spotify. Spotify has been a decent performer today. Pretty big move, up over 4.89% on the day, which is a very healthy move to see. We'll just continue to monitor this. Spotify is putting in this bullish consolidation. You have your first level of resistance that you tagged today with an intraday topping tail now forming. And ultimately this 115 level is going to be your big line. We will look to maybe take profits there just based off of how the S&P and the indices are looking at that point in time. We did have some new action for positions today. We picked up Alibaba. So we're slightly down on Alibaba. If you look where we picked it up at 82.56. One of the reasons I wanted to pick this up is because we did fill this key technical gap. Let me just flip to the daily. We filled this key technical gap, and it looks like you're making a series of higher lows. This is your monthly retrace candle. If we flip to the monthly chart, you can see that we got a beautiful monthly bottoming tail on BABA, and we've had a nice healthy retrace. Usually a retrace consists of around 60 to 70% of the bottoming tail, which we have sufficed and we have completed. So now it stands to suggest that BABA can rally. There is another key technical gap fill over here around the 76.88 mark. We will look to add to our position and increase our BABA exposure by doubling down at that point in time. Alibaba, it does have earnings tomorrow, I believe after the bell, or actually, sorry, probably before the bell since it's a Chinese company. And depending on what their earnings are like, this could be very volatile. So that's why it's only a 1% position right now. But I felt the need. We were owning Alibaba. I remember we had an average of, I think, 111 or something like that, and it popped to 137, which netted us a double-digit gain. And now we're a few weeks later, we're buying BABA starting to accumulate at an even lower average of around 82. And let's just say I can take this position up to 5-6% of our portfolio. We'll look to buy at 76 here. We'll look to buy at a pierce of this major pivot low. And then anything lower, if it goes into the 60s, we'll look to accumulate in there. But we can build up a great core position for that inevitable pop that will happen in Chinese equities. We do have the Chinese government that is still mulling over the potential to stimulate their economy. They've certainly had talks of pumping liquidity into their favored technology companies, and they have expressed that they will support their golden tech darlings in the event that their economy is in some sort of crisis. Congratulations on selling Snapchat today. We sold Snapchat for a beautiful double-digit gain, 13.45%. Let's just take a look at the Snapchat intraday chart. If we take a look at the 10-minute right now, it'll give us a clear picture. So yesterday we were stopped out of Snapchat, but then we abided by our stop and bought in lower. We picked the near bottom here yesterday at 1262 or 1263, I apologize. And then look at this rally that Snapchat had. And we took our profits at, I'm just looking here, 1433. So if I move this red line, we took our profits all the way up here at 1433, and you're now trading below that. So a beautiful, beautiful sell on Snapchat. Congratulations. We love executing those winners over a one-day time frame, especially when it's double digits. Now, if we clear the Snapchat chart, let's just remove everything now and flip to the daily. You can notice you hit this gap window, and Snapchat is still way oversold. You do have some technical support coming in and around this range, which is where you're at now. So you're still oversold. I think there's a probability that Snapchat could get back to around these levels over here, the $16 mark. So there's potentially still a fair bit of upside. If Snapchat starts to retrace back to this low, I will look to accumulate more of a Snapchat position. Okay, so there's a very small position or portfolio, but be ready. Snapchat is still oversold. I think it can go higher, but let's just not get cute with this market environment at this point in time. Another winner I want to congratulate everybody on is Carvana. So this has been a wonderful winner for us over the last few weeks. We just played Carvana a couple weeks ago for a double-digit gain. I remember selling around this 44, 45 level not that long ago. And yesterday we picked up Carvana at 27.56 and we sold it today at 31.40. So an amazing job on that win. Banked basically 14% on that trade in as little as 1 day. Those are the perfect trade setups, the ones that we're in and we're out. Double-digit gains, thank you very much, and we will look to accumulate and reassess. And the crazy thing is that all of these stocks are now lower again than where we just sold. So if Carvana retraces lower, will I look to play it again? You bet I will. Absolutely, at this point in time. There is a chance that it can continue to move up higher, but I'm not at this point ready to chase that stock given what market environment we're in. So let's just take a look to see where natural gas finished. So you did get a topping tail on natural gas. The beautiful thing is that you've closed, actually there's still 58 minutes, so correct me. I'm jumping the gun a little bit here. But needless to say, you potentially could have that topping tail still forming. If there's anything else I need to update you on, let's just keep watching NVIDIA. NVIDIA should be interesting. I don't know what time they're going to have their earnings. Looks like NVIDIA is already getting a small little move. So I'm just going to flip to the daily chart. Again, we have our buy levels if it somewhat drops down. Our first buy level right now from where it is would imply roughly a 12 to 13% drop, and then another 8 to 17% drop, and then another 26% drop. So we'll just have to monitor that price action. Flipping back to the chart over here. Now, would I short NVIDIA if it popped up too much? The only level I would really short NVIDIA at if it popped up too much, let me just remove these trend lines. If NVIDIA popped up into this gap fill, this 186 level, I may consider accumulating and pulling the level of a short. That would be a pretty substantial move over a 1 day period. You can see it would coincide with this pivot bottom here. So that would be my first real area of resistance that I would look to short and start accumulating a short position. If it popped up all the way over here, I would certainly add more to my short. And then finally, you have some major resistance that would come in and around this area as well. So we have our buy levels, we have our short levels. I personally don't care which way this goes. Actually, I do. That's kind of not true. I do care. I would expect NVIDIA to go up. I'm hoping NVIDIA would go up. It is a market-moving stock, the biggest semiconductor right now in the world. So if it gets bid, then ultimately it'll be good for our long positions, and the markets could sustain that bounce over the long weekend holidays. Just flipping back to nat gas, still not doing too much over here. You are getting a little bit of a sell action coming in, but that's still really early. So right now we're just watching NVIDIA, and we're also watching Canopy Growth on our other screen. And I'm just going to flip to see if there's some other earnings that we should be paying attention to on my other chart here. So we have Bank of Nova Scotia, Bank of Montreal, the banks. DIX was obviously a crazy swing. You had DIX collapse into earnings and then it rallied back and turned positive. Those are always a tremendous thing to witness when you have a stock collapse into earnings and then it rallies back and turns positive on the day. Truly interesting chart to look at is DIX Sporting Goods. So I'm not really seeing too many others. We do have, let's see, TriStar Lifeway Goods. No, those are nothing really market moving. a couple other banks. So NVIDIA is still stagnant, not really doing anything. Neither is Canopy Growth. Canopy Growth sitting at just over $5, $5.03. We do have Tiger FinTech. That could be an interesting play. I'm just scrolling through the earnings list right now, and I'm not really seeing anything else worth mentioning. There is Splunk as well. Splunk's not really... Oh, Splunk has had a move. Let's just pull up Splunk for a second. SPLK is the ticker. Splunk. So Splunk is moving. Let's just put on the 8-hour chart, almost a daily. So Splunk has had a rally into the earnings. I'm just going to see if there's a level I would short Splunk at. Okay. Let's see. So Splunk's first resistance is coming in around these pivots. Let's just adjust this line. So you have this pivot high, this pivot, this pivot, this pivot. Kissed it, kissed it, kissed it. So you are coming into resistance up here. This would coincide with this pivot reversal over here. So we may consider a short there at that point. The only thing I'm not liking about that area is there is a key gap here that could get filled, but it might be an interesting area to start accumulating a short. So we'll just have to wait and see how that progresses. But certainly a big pop on Splunk. Certainly a big pop on Splunk. I just want to see where Splunk closed intraday. So if we throw up a percentage on this move, right now Splunk has popped around 7%. So it would need to pop about 11.6 into that area. So I think I'm going to not short it at that area. 11% is not that big of a move, especially in an oversold name. I would most likely rate for this 112 area if I was looking to accumulate a short position. NVIDIA, still not much action on that, but we'll just have to keep monitoring. So yeah, Splunk is the big mover so far on the day. Just scrolling through the list to see if there's anything else. Oh yeah, Snowflake. Ooh, Snowflake. Snowflake. Let's see Snow. Snow is getting crushed. Snow is getting crushed. That's not good for Snowflake. Take a look at this, ladies and gentlemen. Let's go to the 8-hour chart. It's not too bad, but it's certainly down on the day. So let's just do a measured move of how much we have fallen today. So today at the lows, Snow is down 13. It's starting to bounce back a little bit. If we can just find some areas of support, there really isn't too much for my eye. I want to see if this can be a trend line. That would be your resistance, your first resistance. Just want to see if there's any levels of support that we can potentially see on the charts. So realistically, there's not much support on the charts other than when you get down to over here, the sub 100 around the 90 area. So I would have to wait and buy Snow around this 93.50 for the first technical level to occur. And that's even if I buy it. There's a chance that I don't buy it down there just because this is... It could get nasty, Snow. It really could get nasty. Let's just see if there's any pivots that coincide with that. So that would be your second technical level. That's all the way down at 55. That would mean a 40-50% haircut. Yikes. Let's just leave that one off for now. So your resistance, your first level of support is down here at around the 93 mark, 94 area. I don't think I'm going to play Snow for a bounce. I just don't see enough of a price history to get involved in terms of knowing a true valuation for Snow. So we'll just stay off to the sidelines, but it's interesting to see how the stocks are reacting. Splunk's still popping up. NVIDIA having a small little sell. Natural gas is having a little bit of a pop into the end of the day. So it is trying to negate that topping tail. We'll just have to see how it closes. NVIDIA still not really moving too much. If we analyze the sectors today, just going over what was strong today. So financials were up on the day. Energy was positive and strong on the day, one of the strongest sectors. Then you had the materials, which was positive. You also had the industrials positive. Consumer staples just closed positive on the day. Costco closed strong. Target was strong. Target's good to see because we picked that up yesterday and we're in the money 6 or 7% already. So good job on that trade so far. I still think there's more upside. Utilities were the laggers. They finished just flat on the day, but slightly negative. The healthcare fund was slightly negative. Real estate was positive by 0.5%. Consumer discretionary had a strong day, 2.82% up on the day. That's the XLY, so it's good to see there. The technology fund was up just over 1%. Communications just over 1%. Dow Transportation was up just over 1%. And then the broker-dealer securities were down on the day. Lumber was down. IWM was up. And the SPY was up. And the QQQ was up. So interesting price action. Most sectors were up on the day, but there is still weakness in the markets. Splunk's still going. Snow's still going. So NVIDIA's starting to have a little bit of a sell-off. It'll be interesting to see if how those earnings actually play out. I don't think they're out yet. I haven't really seen them. Let's just see if I can see anything. So fourth quarter, NVIDIA printed a big beat, reporting non-GAAP earnings per share of $1.32 on revenues of $7.64 billion, which beat the consensus estimate of $1.22 per share. So it's a beat on the revenue there. That's good for NVIDIA. For the first quarter, the analysts estimate NVIDIA will report earnings of $1.29 per share. So it is a beat of 3 cents per share. Great to see. So 7 analysts have adjusted the price target, all but one lowering their targets to between 190 to 300. That's an incredible range. So 190, the lowest range of the target, is still means this, it implies the stock has positive bias to the upside. But when you factor in 300, that is a crazy move. I don't think 300's being hit this year. Maybe next year if the Fed starts QE again. But the interesting thing will be is the forward guidance for NVIDIA, whether they have supply chain disruptions, inflation's killing their margins. I don't think they'll be as bad as some of the stocks as recent, but certainly there could be some bearish guidance that's forecasted just to match the overall markets. And it kind of lessens the expectations when most companies are reporting bad forward guidance. Other companies will tend to follow suit because it doesn't put as much pressure on their company to perform as well. It gives them that room for error, so to speak. So I think we've analyzed enough. The markets are kind of settling. NVIDIA isn't having too much of a wild swing. Splunk's up, Snow's down. There's a couple other smaller names which we won't go over, but natural gas, let's see how this candle closes in 47 minutes. Truly will be interesting. But once again, we did have massive intraday volume spikes, and you can see the largest 8-hour intraday candle volume came on this, which shows again more distribution is happening. In comparison, more distribution to the downside, and despite this being your largest wide range green bar. So let's just monitor natural gas. It is positive to see a reversal of that magnitude. It'll be nice to see if we can close with a daily topping tail on the natural gas chart. Thank you all for being members and subscribers. Stay tuned for more trade alerts. Congrats on today's profits, and we'll continue